It only felt right to make a part 2 of how to become a mortgage loan originator, because the last video I created, I helped you understand what was needed to get the actual license, how much it would cost, roughly some questions to ask when interviewing with the mortgage company. However, I didn't really share with you my experience. It gives you hopefully insight, because I've had experience working at a consumer financing company where we only did home equity lines of credit, personal loan to consolidate debt, and then I migrated over to be a real estate agent where I also got my mortgage license to basically get back into the business. And doing that, I went independent. So does it make sense to work at a bank? Should I become a broker? What are the pros and cons? And what would that look like working for a mortgage company? So in this video, I'll share with you the breakdown of my experience to hopefully help you make your decision of becoming a mortgage loan officer or either transitioning to a new company. So let's get right into it. When you're working at a bank, you don't necessarily need to get your NMLS license. You are working under the bank's umbrella, and this test that I am mentioning and so forth is not required. These are some of the pros and cons to working at a bank. Now, this can vary based on the bank, size, location. What ends up happening is you are an employee of the bank. You will have hours to clock in, clock out, and report to a manager. And that can mean a couple things when it comes to how you get paid. When working at a bank, most likely you'll be compensated via hourly wage or a salary. And when that happens, the commission paid out on each loan will differ from, say, working independently. Think of it this way. Major banks have brick and mortars. They have a bigger operation system, things that will require overhead and what have you. But this would then reduce how much money you'll be receiving as a loan originator. So the pro, you have a little stability with a guaranteed pay so long you're working at the bank. However, the commission, say if you're doing a ton of volume, will most likely get 1/10 of what you can be getting paid as a mortgage loan originator. So some of the pros and cons to the banking world is you are required to go into an office. For someone that may have been accustomed to, say, working from home or meeting clients and does not want to sit behind a desk, this may not be a fit for you. I'm not saying that they're requiring you to be at a desk at all times, but you will have to report to a manager. There's different guidelines in terms of the products offered at a local bank versus a mortgage company or as a mortgage broker. The pros would be perhaps the name, credibility of the bank. You have that presence and the name has been established. But the cons for me is when working at a bank, I don't like to be tied down to location. I want to have the option to offer other products outside of what's in-house. Option number 2 would be to work for a mortgage company or a direct bank. Here at Absolute Mortgage and Lending, we are a direct bank. We sell directly to Fannie and Freddie Mae. Those are the agencies that buys back the loan from the secondary market. As a direct banker, we are loan originating, writing loans to be sold over to that secondary market. So a lot of times when you're working with someone direct, like AML, the fees being more cost-effective, rates will be a lot more favorable because you are a direct lender. You are cutting out any middlemen that may be involved into brokering the loan. Why I love working for a direct bank? Because we offer a lot of products that not only are conforming, we specialize in other products such as non-qualified mortgages, you may know as no ratio, no income docs, and we also offer business loans, commercial, SBA. We finance land. A lot of the times working for a bank may not offer that robust product line. Another reason why I like working for a mortgage company is they have experience as mortgage lenders. When you think of a bank, that's where someone should hold your money. Although they offer mortgage products, they don't specialize in it unless they have departments that dedicate their staff solely for that product. Some of the cons of your mortgage company, whether they're up to date with technology, marketing, systems, things that makes your job as a loan officer easier because you have those resources. And then lastly, there's your mortgage brokers. I don't have experience here, but from what I gather and reasons why I didn't want to go that direction is because although brokers are known to give you the lower rate per se because they can control the pricing, it gets a little expensive expensive because they are charging origination fees. When you're working for a bank or a mortgage banker, they have set fees for underwriting, processing. There's not necessarily an origination fee. And because they're brokers, they're seeking investors to basically buy your loan back and doing it at a cost. They're brokering out the deal. What I've seen is a lot of them are independent, not necessarily mainstream names. So when you remove the brick and mortar, remove operation costs and things that we talk about, that's where brokers are able to afford to go lower on certain pricing. However, their names may not be established, as I mentioned, because they are a small mom and pop, unless you are one of the bigger players. I like being in the middle of the three. You mentioned banks, mortgage bankers, and the mortgage brokers, because how you get compensated is very favorable, and you get all of the resources that a brick and mortar establishment would provide you. Having worked at 2 mortgage companies since getting my license, I can speak to a level that you can work for a really large company that has bigger pockets, but you become a number where everything comes down to production. If you are not comfortable with always putting in that grit, the bigger mortgage companies will have parameters in place that require to produce a minimum per month. So that could be stressful, especially in our market right now where things are beginning to look more upward. It can really affect some people to feel that they have to start considering other companies because of that minimum production requirement. When it comes to the 3 different types of directions you can take, if you're looking to become a mortgage loan officer, mortgage originator. And I'm going to get into it now about my experience. So to go back, 2004, I was consumer financing, where HELOCs, personal loans, was ultimately what I'm writing. Then the crash took place in 2007. I got my real estate license to sell properties, and fast forward to 2017 is when I got my NMLS license active. So since then, I'll tell you what it looks like a day in the life. First is you are going in on a clean slate. I don't care how long you may have been in the industry, whether you've done title work, you've been a real estate agent, you have insurance background, property management. What separates you from everyone else? That was hard for me to go in coming from a background where I was getting a paycheck. I had a salary and bonus potential. You are going in majority of the times as a mortgage loan officer with your good faith, hopefully good credit, and a decent amount in your credit lines to carry you over. At the end of the day, this is a very lucrative industry to be in. And if you think about it, homes, housing, businesses, they're all necessities. We're always going to need it. And because we offer all those products, I feel confident about this business. It is truly recession proof. And if you build your books now, because nothing great happens overnight, you will find this to be very rewarding. And with that said, I just want to shoot it straight to my audience out there that is really considering getting their mortgage loan officer license, what the repercussions are, what to expect in terms of getting their first deal. Here's how I would recommend it. There's numerous ways of how you can prospect in this market. I can share with you just top 5. Number 1, go out and network. Number 2, create social media content. 3, make sure you are building an email list or a contact list as you're out networking. 4, are you attending open houses, brokers opens? Are you enrolling into community events and organizations that you can be a member of? And number 5, really niche down. In the beginning, I was deterred to go down a direction of non-qualified mortgages. I didn't like that because there is so much competition and little margins to be had. You have to be identified as the thought leader in your industry. This has been quite the journey for me. I got my license at the end of 2017 and I had 2 loans closed that December. To roll into 2018, it was tough. A year of trial for me. And I say that because I tore my ACL, I had surgery, I had a wedding that I was the bride in, and needless to say, there was a lot of life challenges. I just started getting my feet wet. Came up with a business idea with a realtor partner, and we went business business to business, and it just really took off. I saw the fruit of my labor in 2019, and since then it's just been ramping up, and I'm so grateful for this YouTube channel because I'm able to speak about this and share my experience. I hope someone out there is listening and that this resonates. Truly though, if you are looking to switch mortgage companies because a lot of doors have been closing, I understand, but know that working for Absolute Mortgage and Lending has been such a blessing. Kai is the CEO, and he's a buddy of mine from New Orleans, Louisiana. And if you don't know, Louisiana boys, they just do it different. We're very family oriented, and I just couldn't be more blessed to be a part of their organization and help with recruiting, marketing, the business, and the brand all together. If you have questions, please be sure to reach out to me. All of my information is below. Thanks so much if you joined to the end. Why don't you drop a note and say the key to 2023. Thanks guys. See you on the next one.